Hi, my name is Fred Cohen, and I'm going to talk here about global early stage investment. The 70% of early stage investment is local, and I apologize, I don't remember where I got this statistic, but I think it's pretty accurate. But that, if true, means that 30% of it is not. So the question is, how do you deal with the non-local investment? How do you get access to that extra 30%? It certainly would help to have that 30%. And in particular, when I say local, if you expand this on a global basis, how do I get, tap into these global resources? And then the other question is whether it's right for me. And generally in these sorts of discussions, we want to answer the who, what, where, when, why, how sorts of questions. I think we'll talk about where along the way. So I want to just talk about this from the perspective that I have, which is Angel to Exit, which is what this video is produced from, but also as president of the Pebble Beach chapter of Keiretsu Forum, which is a global investment network. It deals with early stage companies and goes up into the venture level. And Keiretsu Forum has over 3,000 members in about 53 chapters on 4 continents. You can see that by the red designations of some of the countries that they're in. Angel to Exit, in the meanwhile, has people that we work with, including angels and advisors and feeders and exit partners and so forth, where you see the blue areas of the map. And there are some others in there somewhere. It's not as crisply defined as they do it for Keiretsu Forum. So Angel to Exit, we help grow companies, which includes startups, emerging, established, and market-leading companies. Ultimately, they're going to exit. And then we have these key differentiators. And one of the key differentiators that we have is this global investor network. So we speak from experience. There are basically 2 sides when you're talking about global early stage investment. Again, this isn't for big corporates or public companies and so forth. So there's the company side and there's the investor side. And of course, companies desire certain kinds of investors, and investors want certain kinds of companies. So whichever side you're on, the company that's going to be desirable to the international investor is going to be for early stage startups, it's going to be incubation only. They're almost certainly not going to put money into early stage companies, but they might put other resources, incubation resources. Once you start to get traction, so now you're emerging, the sales, when we're talking about traction, we're generally talking about sales, but there are some exceptions. That's when you tend to get into angel networks, and that's really the major way you can access that global environment, unless you have very good contacts. Or another example would be a really good law firm that's a global law firm that can introduce you. Another example is there are plenty of small companies where you have people that are immigrants from one place to another, and so they have family or friends or something else back home. But generally, you'll need an angel network or something like that to get into that global space. Once you're established, the companies that are desirable to these investors are growth companies. They're going to venture capital. So that's the investor group that they're going to go to. So these are venture folks that are on a global basis. And then, of course, market-leading, firms, they're getting ready for exit. So presumably they've already globalized at least to some extent. And the M&A firms that are trying to help them will get them with related global corporations for strategic exits or other types of M&A activity. The desired investors, if you're a company, you're going to want highly engaged investors, especially at the early stage. You're going to want them to be active and thoughtful. Active as in they're dealing with multiple companies, they're participating actively, so they have more knowledge, more understanding, more connectivity, if you will. And thoughtful as in they're going to figure out when working for you as a startup or as a CEO typically. They're going to help you understand issues that you didn't understand and think about your issues with their brains. You want, again, if you're a global investor network, that's what you're looking for. The goal here is to cross boundaries. And the problem with typically a local investor or a single investor somewhere on the other side of the world, it's just really hard to engage with them. And if you do engage with them, unless somehow you're related to them or you already know them or you're connected through some other mechanism, then it's going to be very difficult for them to deal with these boundary crossings. One of the biggest advantages, of course, here is that you can get access to more efficiency. We'll talk about that later. There are resources related issues. So you want to make sure the investors have resources. Particularly useful is connected verticals. So if you're in a particular vertical, a business type or whatever you're doing in your company, you'd like to have investors that can connect you to resources around the world that benefit from having you working with them, where you benefit from working with them also. So it's a strategic advantage. And then, of course, global execution is non-trivial. So you really have to do this. I just want to mention that the biggest barrier to global investment is trust, right? You think about it, you're talking to somebody from Pakistan or Indonesia or Japan or South America, Colombia, or somewhere in Eastern Europe, or China. How do you build up trust? How do they come to trust you as a company or an investor, and how do you come to trust them as a company or an investor? How do you know they won't walk with the money? How do you know they won't fail to execute, and you'll end up spending a lot of time and effort and they'll somehow take advantage of you? So building this trust is difficult with investors locally, but much more difficult with distant investors, because you just don't have as much face-to-face time, and it's harder to build trust on a distance basis. So the global networks are one way to do it, and the other way is connected individuals. Global networks, they're already building trust relationships across the world with each other. And so if you have a local member of that network that's working with distant members of that network, the trust accrues through that local person that you can work with, and that gives you access to that network. The other one is connected individuals. It might be families, it might be other people that have worked together previously in a business and happen to be in different places. And then the other really critical thing to understand here is that there are enormous legal and regulatory issues. And they're very complicated. Different cultures work differently, laws are different, transborder issues arise, import and export issues arise, and so forth. So you need to make sure you're tied up with somebody that has a good law firm involved, a law firm that deals with the world. So given all these complexities and the difficulties, why would you even try? So there are really two reasons to do this that are sort of predominant in my view. One of them is the differentials, and the other one is scale. So I'll start on the right side with scale. So India has 1.5 billion people. China has 1.5 billion people. My numbers are off by whatever percent. Africa, 1.2 billion. Europe, 740 million. European Union, 300 million, give or take. North America, 580. South America, 420. So wherever you are, if you can go to somewhere else, even if you're already in India and have 1.5 billion customers that are in India, there's another 5.5 billion in the rest of the world. So the ability to scale to a much larger size is a major differential, a major advantage in why you would want to go that way. The other one is the other differential. So their labor rates, for example, are different. So if you can get equivalent labor at a lower rate, or the equivalent of labor at a lower rate, that is maybe multiple laborers that are not as good at whatever you're looking for, but whose aggregate rate is low enough. If you can have different regulatory controls, so you don't have to suffer under regulations. For example, export of cryptography from the United States is more heavily regulated than, say, from Europe or other places. So you might do the research and development in Europe, if their cryptographers are just as good, and import it to the United States instead of trying to build it here and export it from the United States to there and have all these transborder flow of cryptographic technology regulations. And there are plenty of other regulations in almost any area you can think of where there's an advantage to being one country versus another. So finding the right place to have advantages from a regulatory standpoint can be a big plus. Access to raw materials. So different materials are located in different places around the world. And that's not just the stuff you can dig out of the earth. There are also issues like infrastructure, what things they support, what things are already manufactured there. If they're already making something there that you can use, rather than try to manufacture it here, it's going to be much better to manufacture it there. in most cases, unless your business plan calls for that as a critical part. The knowledge base is different in different places. You want to go to places that have the knowledge you need to succeed. And so if you can get their knowledge combined with your knowledge, you can do that much better. And that's one of the reasons a lot of companies from around the world come to the United States, in particular to the Silicon Valley region and California, because the knowledge base in California in this area is just much better historically than in these other places. So obviously that changes with time. And then of course there's expected price. So for example, we have people in South America that do work, and we build a business in South America to do work in certain areas where we think we can get good people there to do the job just as well as people in the rest of the world, but we want to sell it into Europe, because in Europe the expected price for somebody with certain high quality capabilities is $500 to $1,000 a day, whereas it would cost half of that to pay them in Europe. If you do that in South America, it costs 1/10 of that to pay them. So this is it's not just a labor rate issue, it's an expected price issue. If you tried to sell that same thing in South America, you can only get a quarter of the price for it. So, the what, this is why you try. The what is the things that take advantage of that. So depending on what business you're in, different businesses can take advantage of different aspects of this. So you figure out for your business which things you can take advantage of and determine whether it's more efficient or better for your business or worth the risk for the reward to try to do this on a global basis. So basically, the rewards, the business benefits are fairly readily calculated once you get the numbers from these places. The risks are another issue, and the real risk is you better know what you're doing. If you don't have good connections in country, if you don't have the right legal situation in place, if you're not working with good people, then the risks sort of skyrocket. Naivete or mistakes or what have you, or just cultural differentials are problematic. And of course, you'd better have a good team, and this is always true, but if you're going to go in this sort of globalization approach, you want to have a good team here and a good team there. And those teams are going to have to work together. And coordination is much easier than it used to be. We used to have to send faxes back and forth, and you get a couple of exchanges a day. Now we have live online remote. We use Zoom for our meetings, and we do this all over the world. So you can do this a lot more easily today than you could before, because communication replaces transportation to a large extent. And yet I'm flying to India soon to go, it's transportation instead of communication, to meet people in person and get business to function. And there is some extent to which you need to actually be there to work well with others. And last but not least, are the sort of the wins in the house. So you want to do it when the risk and reward is right, and this differs by investor. So different investors invest at different stages. They invest in different kinds of companies. So you want to hit the right investor, and the investor wants to hit the right company at the right stage of their development. You can only really do it once trust is established. So it's usually, at least partly transitive. I trust you and you trust somebody else, so I trust them through you. On the other hand, sort of you being present are the person I'm going to blame it on if it doesn't go right. So that's an issue. And you also have, a local person typically that's trusted. So somebody that's in your country or in your region or in your city, depending. And then, the other thing is availability of funds. And because global money flows are a little bit different from local money flows. There are tax issues, there are legal issues, and so forth. Different times of year, some people from some places might want to invest in other places. Other people will not want to move their money at those times of years, and so forth. So these are just more complexities. And how there are sort of two classes of trust relationships. There's families and other sort of organizations that you're a member of, and then there's sort of these global knowns, right? So if you're going to Price Waterhouse, regardless of how they work, you might deal with Price Waterhouse anywhere in the world because it's a globally known entity. So I'm sort of a very strange position, being relatively small and quite small in terms of the scale of our operations, and yet because I've spent a lot of my career going around the world, I'm a global known. I mean, in China, there are people that know me by reputation, know my name, and the same thing in India, and the same thing in Europe, and so forth. So there are some, weird cases like that. In cybersecurity, I'm very well known. But if you're looking for, something else like the steel business, I'm not known in the steel business. So there are people that are known. So these trust relationships build that way. And then you also want to make sure you use experienced investors. And what typically happens is the experienced investors do the transborder stuff, and there are other people that follow them. So you'll get somebody who's working in the U.S. and Europe, and they commute back and forth, and they have businesses in both places. And when they invest in something in Europe from the U.S., other U.S. investors that know them here will follow them there, because that's the person that's going back and forth that they trust. And the same in the other direction. And then there's on-the-ground presence, right? So it's very difficult to not be on the ground and interact with people. You just don't get to spend as much time. You can't see them. You can't talk with them. So what's happening here is, if you have an incubator, we have an incubator that we're working with in India, for example, and we have our incubator here. And so the collaboration between the incubators allows us to have a presence there. So we have an on-the-ground presence, and they have an on-the-ground presence here. When they come here, they have somebody they can meet with, talk to, a place they can go. And so it makes that global process more functional. Just a couple warnings. One of them is that building trust takes time, and breaking it takes an instance. So it's one of those things where if you're in these kinds of relationships, it just takes a lot of time and effort to build it, and it's very easy to break it. So it's people are a little bit hesitant, for obvious reasons, to deal with people from other cultures, other places, places they don't know as well. So that's where you get the expatriates from one country living in another that sort of facilitate these kinds of businesses and transactions. And then I just comment that since the 1980s, I've been running a small international business, and as I mentioned, it was a big revolutionary advantage to be able to exchange via fax machine rather than postal service. We used to send, not Federal Express, which didn't go everywhere. We used to send, mail, U.S. mail, somewhere, and it'd take a week to get there, or maybe 3 or 4 days at least to get there, and take 3 or 4 days for an answer to come back. And international phone calls were difficult and very expensive, whereas this is now, very much different. So the trust and many of the other relationship aspects are much easier today than they used to be, but there are still these residuals lingering about. So with that, I'm going to thank you, and I'd be happy to discuss it further with you if you're interested in, growing internationally.